Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, we saw a little bit of a step back yesterday. Would you characterize that as regrouping or some of the commentary from the Fed chair?
I think it's just a little bit of a rotation that's taking place in the market. If you actually look at the performance, we still had the majority of stocks in the S&P 500 in the green yesterday, but it was a little bit more defensive. You had utilities, you also had real estate as well as energy kind of leading the way. Those are a little bit more of a low beta sector rotation that's taking place. It wasn't a sell everything type of an event, and maybe it was on the back of Jerome Powell's commentary. I'm not so much in my opinion because he didn't really talk about anything that was really new or anything of that nature. I think it's just the fact that we're cooling off and just continuing to wait for new data to hit the market as well as new news flow. So at the end of the day, we're still making higher highs, still making higher lows right now. We still have the September seasonality that we have to be mindful of, even though that has not come into effect as of yet. But I wouldn't get too worried about it at this point in time until you start seeing us really break down below some key levels. You're talking about 6,400 on the S&P 500, so you're still about another 150 points, 200 points away from that level right now.
Listen, we only have a few trading days left this week, 2 next week for September to potentially rock the boat. But so far, it seems like the favor is in the court of the bulls as it relates to September. And, great point you made yesterday about where you saw some momentum versus some outflows here. Let's get your targets on the S&P 500 now, then. What are you watching out for the S&P 500 to the upside and the downside? And then we'll get into some individual stories here across.
Yeah, to the upside, 66.90. To the downside, 66.30. Volatility is coming back a little bit. And just to note, Diane, usually when we have these vol up or VIX up, stocks up scenario, one of them does break. I think we kind of talked about that over the last couple of days. And that's exactly what happened early on this week on Monday. And so we did have that readjustment when it comes to volatility. If we do see vol crush, that's going to be conducive for equities moving higher.
Okay, so let's talk about the massive spending that's going on as it relates to AI. We keep hearing all these big numbers. You had NVIDIA earlier this week, and now you've got Alibaba with some news on this front. Tell us the latest here.
Yeah, we actually have 2 news items coming from Alibaba. The first one, obviously, they are announcing that they're going to spend more than that $50 billion target that they announced in February when it comes to artificial intelligence and their AI budget just in general. Now, a lot of that spending could be utilized for building out new data centers as well as expanding their cloud offering. And it does appear that they do have some data centers that are going to be coming online here soon that they are working on. One in Brazil, one in France, and also one in the Netherlands. So that could also increase some of this spend. And at the end of the day, we are seeing a ramp up here. There's still a need for compute. There is a little bit of a siloing taking place between China and the United States, and there has been some issues when it comes to these data center style chips, not only when it comes to the GPUs as well as the CPUs, and that's really fueling the optimism for a lot of these China stocks that have exposure to artificial intelligence. But the other announcement that they had yesterday, as well as rolling out another large language model. This is the Qwen 3 Max large language model. It's a full stack one. So it comes with the model, it comes with some of the infrastructure, as well as the chips. And it also integrates into NVIDIA's chipset, which kind of goes counter trend to what we've heard from the Chinese government for that matter. So kind of a double whammy, if you will, to use a technical term. When it comes to Alibaba, the stock is up around 9.7% right now. And you are still seeing a lot of enthusiasm. When it comes to these China stocks, there's only a couple of ADRs that really see a significant amount of institutional flows. Alibaba is one of them. You have JD.com, you have others. And so you're probably also seeing maybe a little bit more of a risk on tone, maybe of a situation where these China ADRs trade at a little bit of a discount. You're starting to see some favorability when it comes to AI. That's probably also pushing prices a little bit higher as well.
So, to your point about Alibaba and NVIDIA, that would be, essentially connecting the ties more versus the pressure from China's government on, kind of not decoupling, but putting the heat on NVIDIA. But it seems that it's all about the spending in AI and what may appear to, in terms of the government's point of view, be strange bedfellows actually work better for the two. Any final thoughts on that?
Yeah, so I think the reason that they have the integration with some of the NVIDIA chips is because obviously NVIDIA is commanding this market right now, and there's already been implementation of the H20s as well as some other GPU style chips within the China market. So they still have to address that infrastructure. That doesn't really mean that they're giving the green light that the NVIDIA product offering is going to expand in China, but they have to have, once again, some of that capability in order to address the needs, the current needs right now when it comes to these data center offerings or these cloud offerings. So I think that's really kind of the take. And then once again, we continue to hear news almost every other week coming from Huawei around the advancements of their chips that they have hitting the market. And that's probably where you're going to see Alibaba's biggest spending is probably those domestic chips rather than these international chips that continue to get held up because of security concerns as well as this trade deal that continues to prolong itself.
Okay, let's talk about a massive move that you're across in the pre-market. Lithium Americas, that stock is rallying more than 70% right now, following this Reuters report about a potential government stake. What are you watching here?
Yeah, we're seeing the shares up about 70%. Now, when you're looking at Lithium Americas, one thing to kind of note, there's only a couple of domestic players when it comes to lithium mining. And you have Albemarle, which is also catching a little bit of a bid, as well as Lithium Americas. And so you are seeing a potential stake from the United States government. Now, the details are still being worked out, and this is actually very interesting. If you kind of go under the hood as to what's actually happening with this particular deal, Lithium Americas has a loan from the DOE. They want to negotiate that loan, especially the amortization schedule here. So they want to kind of adjust the payments when they are actually paying on this loan. And so there has been a little bit of a back and forth, and some of this negotiation appears to be the fact that Lithium Americas is actually offering potentially 5 to 10% of some warrants out there that gives the right for the United States government to take shares into this company in order to have a better term structure when it comes to the current DOE loan. So that's kind of the underlying forces here, a little bit different than what we saw from MP Materials or even from Intel. This seems to be on the back of another negotiation that's already kind of been taking place, and hopefully, once again, they're trying to come up to a resolution. So this is an olive branch that Lithium Americas is really offering the government in order to kind of structure their debt a little bit better. So a very unique situation. We do see, obviously, the Department of Energy as well as the United States government still trying to put dollars to work in order to secure domestic supplies. This will have an impact over the long term when it comes to not only EVs, I think that's kind of the headline right now, but lithium is also utilized in battery products that obviously probably will be utilized in the data center build out, as well as some of these defense items that we have when you're talking about military defense. So a strategic move for now, but this is on the back of another kind of negotiation that's kind of taking place between the government and Lithium Americas, and not just an outright equity stake.
Okay, so a little bit of a negotiation dance, especially as you mentioned in the context of that loan. But at the same time, to me, it follows that playbook as it relates to, like, for instance, MP Materials, of the U.S. trying to reduce its reliance in certain sectors on China. Is that a fair take?
Yeah, that's a fair take. I mean, if you're looking at China's output right now, it's definitely dwarfing what we are seeing here in the United States when it comes to lithium production. And so, once again, there's only a couple of companies publicly traded that actually have their hand in this space. So if you are a believer that this is going to expand, or this type of equity deal would expand, you're looking at Albemarle as well. They also have a facility out in Nevada, which is where we are seeing the majority of this expansion to expand mining when it comes to lithium. Now, last thing that we have to kind of note, the reason why China is actually one of the bigger producers of rare earth metals is not because of the mining so much. It's actually the smelting or the refining of these minerals into final products, which actually does get a little bit messy, and trying to actually build up the infrastructure for that takes a lot of time and effort. So it's not only just the mining aspect that the Department of Energy as well as the United States government is going to have to focus on. It's actually going to be the refining aspect as well, which we do lack at this point in time. You can have all the minerals that you want, you can have all the mining infrastructure that you want, but if you can't process that material, then it's kind of worthless. You can't really edge China out. So maybe we get some announcements over the next couple of months or even years about building out more refining infrastructure or smelting infrastructure when it comes to these minerals.
All right, thank you, KG. That's our Kevin Green, Senior Markets Correspondent. Appreciate it.